every Wednesday. Our goal is to pick a case study, something that we think that you would find interesting. As always, you need to seek professional guidance, whether accountants or lawyers or any legal advice. We do the best to present what we know. We are live on Facebook now, so everybody has to put their smiles on so that the world knows how good looking you are. And we really appreciate it again, everybody coming here. So this is an educational series. So again, we are not offering anything here. We are not professionals. We're not accountants. We're not lawyers. We're not tax advisors. But our goal is to provide you what we know, what we've learned, and then you can take that information and you can go ahead and get your own professionals that can help you, because all advice is very personalized. This is a very generic look at everything. So tonight we're going to talk again, who is Massive Capital, partnering with Massive Capital. We're talking about juggling a W-2 job and real estate investing. As always, there is time for Q&A. Anytime you have any questions, you can put them in the chat. We may answer them during it, but we'll definitely answer them at the end. And at the end, we always stop presenting, turn off the recording, and anything goes after 7 o'clock. So a little bit about Massive Capital. We're a vertically integrated real estate company. We specialize in ground up construction, retail, flex space, industrial, and mixed use multifamily. We're also an owner operator of value add multifamily assets. So if you look on the left-hand side, we're involved in equity, brokerage, and brokerage is on the triple net lease. So make sure we understand triple net lease is normally what happens in a retail commercial development. So whether it's storage or whatever, that means that the tenants are responsible for all of the expenses, and you just own the property. Also property management, again, on the leasing, we do not have property management company on multifamily. We're involved in development. So we develop new projects, and we do that in metal construction and wood construction. And then we also have a great education program that we'll talk a little bit about. Where we are very focused on, you can see on the map at the top right, is the Texas market. A lot of us are located in the Texas market, so we have a lot of our assets there. But we also have 2 properties up in Denver, Colorado. We have 2 properties in North Carolina and 2 properties in Atlanta, Georgia. You'll see Phoenix and Tampa, and those are markets that we're just looking for retail developments. At this moment in time, we're not looking for multifamily in those markets. So we are partnering up with Realty One. Realty One has about 500,000 square feet of retail and about another 250,000 square feet of retail center, which is more of a lifestyle center. They have $290 million in assets. Massive Capital has 1,346 apartments. We have the X Space, which is a 90,000 square foot development. So we're worth about 175 million in assets. And when you put all of that together, we get to one of my favorite words, $500 million. So it's very exciting to be able to get up to the $500 million mark. I'm super excited about that. So our partnership with them has really helped take us to the next level. We'll be able to do a lot more new development work and more in the retail commercial development space. All right, so this is our team. So Brenda is now out of the witness protection program, for those of you that I joke when she comes all the time. So at the top, those are the normal people that you're going to be dealing with on Massive Capital. But you can see our extended team has a lot of different positions. And a lot of these folks are from the Realty One team. So they have a full in-house financing, they have brokerage, they have leasing, they have construction managers. And yes, they hire third-party contractors to get the work done, but all of the projects are in-house that we're building. And this de-risks a lot of the projects. So when you're the actual contractor, so you're doing everything, you're buying the land, entitling it, getting it permitted, and then you're managing the construction, it takes a lot of the risks out of what you're doing. So we're super excited to be growing our team.
Yeah.
And then on our partner side, so on the left and the center bottom, I had to move Mike over because it always threw me off. He was on the right. So we have Shirar, Sanjay, and Mike. They are the principals of Massive Capital. And then on the top, you have Bo, Pat, and Alexis. They are the principals of Realty One. And merged together, these six folks are responsible for operating the group, which will still be called Massive Capital. So we're very excited to be able to work with these new partners. They bring a lot of experience on things that we just don't have experience with. They've been doing this for 40 years, and some of the folks have been with that company for a very long time.
Excellent.
All right. So I know we had a question earlier. We still have not rescheduled the in-person event, but we do have our next virtual conference. It is our third conference. In just a minute, we're going to put some codes into the chat to where you'll be able to get a discount on those particular conferences. I'm sorry, I should have had that ready to roll in there. So if I will put those in the chat as soon as we're ready to do it, but it's an all-day event. And with these codes, you can basically come for free. You can get a VIP ticket for very reduced price. I suggest the VIP because it gives you access to talk to people and the recordings. So we're super excited about having this event. It's be our third one, and it's been very well received.
Yeah, it's excellent, Trevor. Thank you. And yeah, and we bring a lot of, not just us talking, right? So these events, we have a lot of specialists from companies such as Walker and Dunlop, CBRE, Old Capital, JLL, Ramey King for insurance, and Todd Robinson's joined us from a legal aspect. So we bring a lot of more than us sharing just our experience, and we bring others to share their experience and really get into more nitty gritty about what's happening in the markets. Sometimes special markets, sometimes, focus in on Dallas or Houston or Texas just in general. So a lot of great content comes out of that. At the same time, I'm going to kick off a survey here. Love to have y'all jump in this. We're going to do a couple surveys tonight, just trying to, see where we can help and fill in for people. What do they need? How can we improve our sessions that we do to get to better, content as we do this week in and week out. So please jump in and answer the poll. I got about 80 people there, so we'll see, if we get to 100%, love to, then we can launch the second poll as well. So Massive Capital and current and post activities, right? So just a little bit of background, those that you know us, we closed 10 deals in 2023, a combination of value add, multifamily value add properties, some land for development, some opportunities of triple net, which is basically retail development opportunities as well. And, and the X space that Trevor mentioned in the previously. So we have a lot, more deals coming down the pipeline. Currently, we have a 506C that we're doing. We're about 65% subscribed. This is in San Antonio, Texas. We're looking for a closing date. We're closing roughly around the 26th of January. So it's coming up soon. If you'd like to get in on that, just take a look here, scan this QR code, and that'll let you get signed into the portal. So one thing I always try to tell everyone, it doesn't hurt to sign into the portal. There's no commitments, there's no expectation if you sign into the portal. That lets you have the opportunity to see the investment, see other investments that come along as they come, and just continues to let you be more involved, connected with Massive Capital. So this deal right now is the San Antonio. It's Horizon is the name of the property. 204 units in San Antonio, Texas. 18% projected IRR. over 22% annualized return, more than double. And this is going to lead into some of Trevor's talk today, I think, on passive investing and compounding, and a 7% preferred return. So how can you partner with Massive? And one of the things is we grow together as a team, meaning not just us and Massive, but us with any, others out there. And we'll talk about this from starting with new construction. We look for landowners or people that bring land. We can JV with them and do developments, and the land comes in as part of the LP, and we do the work, we do the debt, we do all the permit property, get it filled up with tenants, and operate it. So it's a done for you service, white glove. Multifamily, we do asset management. We've built a tool. It's an in-house tool now, asset management software that lets us manage all of the deals either individually or as portfolios. So it's a great opportunity, and we'll be rolling more of that out in the future. But we offer that on the deals that we do together with other operators. CapEx, and so as with Realty One, we have a full company of GCs, construction companies, so we can do the CapEx internally. So heavy CapEx operations, definitely we can do. Credit enhancement. So basically that means we can support you on doing a deal that maybe is a little more than your balance sheet or your liquidity or your experience can support. And we come in, we support as guarantors, be KPs on the deal. Education. This is one of our newest growing opportunities. We have the CRM, which allows, provides you with a website of setting you up for primarily for capital raising. So anybody that's doing capital raising or wanting to improve their capital raising techniques or process, get this CRM here. We'll drop some of these in the chat, some of these links. The website, the CRM, and some automation is already built into the process to what is this. And then finally is the GP Accelerator Program, the massive mastermind, if you want. It's you sit in with the principals as we do deals. We look at your deals, you look at our deals, you sit through the whole, I love it, Trevor talks about the sausage making. You sit through the whole sausage making process and get to learn hands-on and accelerate into being a general partner. So we look at this as opportunity to accelerate people that want to be general partners. So sign up there, massive.capital coaching. You can schedule a call, or you can just go and sign up if you want to go ahead and get the program now. Deal flow. So we been talk, our deal flow, and this ties into the whole education program as well. So, last year we underwrote nearly 500 deals, and that lets us have the opportunity to bring in, those options for the students to underwrite deals with us. So we have a very unique, solid deal flow. Mostly multifamily is the primary, but you'll see we have some mixed use, flex space, new development, retail that we look at. But the primary is existing multifamily value add. And as we go through, as I said, we have different people that are assigned deals within our community, and they get the chance to underwrite it, edit, work with us, go back, do it again, look at, draft the LOIs, put it together, and, really get to negotiate and structure deals with us. So it's a very hands-on process, accelerated coaching, learning by doing. So not just sitting out on the sideline, watching, videos and things, but you're actually in the trenches doing the deals. So again, take a look. I think if you get a chance if you're interested and you want to, you got the means to participate with this. We'd like to look at it with you, see if you're a good candidate for it. And, if we want to bring you guys in, we'd love to take a look together. Okay, Trevor, I'm going to turn it back to you
Thank
to
you.
start the case study and keep the ball rolling.
So tonight we picked the case study, juggling a W-2 and real estate investments. Is it worth it? And then we wanted to tack on to the end, what is a real estate professional? Because that's one of the reasons why you may decide that you want to leave a W-2 job. So again, this is a very high level view. Our goal is to try to provide in a short period of time the basic content. If at any time you want to talk about more, I put in the chat to book a call with a discovery call with any of us. We would be more than happy to talk with you in greater detail. And we'll have some time for Q&A at the end. So
Sorry, Trevor.
it's okay. All right, so step number one, if you don't have a job, you're not going to have any money unless you inherited money, won a lottery, do whatever. So step number one, you need to work. And when you're going to work, you want to save a portion of your income that you can passively invest into a real estate deal. Step number two, you're going to save to invest. Okay, so you're going to work, you're going to create your income. You're going to take a portion of that income that you're going to save, and you're going to have to save up because many deals have a minimum of, let's say, $50,000. You can always get in for a little bit less, but you're going to want to save to be able to invest. And then step number three, you invest to create passive income. So we'll talk a little bit about it a little further on, but passive income is your money working for you. So when you're in your job, you're doing time for money. So you put in your hours at work, your employer sends you the money, you sell something to get commission, whatever it is your time that is making your payment. And then you're going to save that. But at step number three, you want to create passive investing, and that's when you put your money to work for you. So you're no longer working for your money is working for you, and that is the beauty of passive investing. And then step number four, repeat until you can skip step number one. So we're going to talk a little bit more about that because at some point, if you stop, you're going to do it. But you want to work till you're creating more money so that you can invest. This is a lot different than a lot of people talk about. A lot of people talk about, oh, try to get into this full-time right away. And I'm a little bit different, thought different. Again, it doesn't mean it's wrong to do it the other way. But if you create this need where you need your passive investments to pay your bills, you'll see in a future slide here that it's going to limit your path to financial freedom. So we'll go to the next slide here. So have your money work for you versus you work for your money. You start your investment dollars and let them do the work. Time money is the most expensive versus money that makes money is the least expensive. And of course, the great Warren Buffett, one of my favorite sayings, and I didn't learn this till I was much older and started doing it. If you don't find a way to make money while you sleep, you will work until you die. So think about that. I spent most of my life going around, I call it the monopoly board. I went around, I got paid. I went around, I got paid. And then all of a sudden, it's a little bit later in life, I realized if I could have a way to start making my money work for me while I sleep, then that money is going to continue and grow for me. So that's definitely something that's very important for you to get through.
Sorry.
So this is an interesting slide that I like to talk to people about. And this is a lesson for myself more than it is for everybody else. So typically on a real estate, this is a very simplified view. Typically on a real estate investment, you're going to look to double your money every 5 years. So my assumptions here are that you always have doubled your money 5 years. You have had no tax implications, anything that is reduced, that you've been able to write off all of your passive income with your passive losses. So if you look at this thing here, if I started in year one and I invested $100,000, and in 5 years that turned to 200,000, I reinvest the 200,000 and it becomes 400,000. I reinvest the 400,000, it becomes 800,000. I reinvest the 800,000, it becomes 1.6 million. I invest the 1.6 million and it becomes 3.2 million. So yes, this is a very oversimplified version of this. But if you think about it, if you did this for 25 years, who doesn't think that having a nest egg of $3.2 million invested in real estate would be life altering? It would change it. So one of the things though that I want to talk about a little bit is if I made 100 and got it to 200 and I spent the 100 because I needed that money to live on and I reinvested the 100 and I didn't do this compounding effect, at the end of 25 years, I would still only have 100,000 because I'm living off of, I'm spending. So this concept that we're trying to talk about today is for you to continue to compound your money. And again, one of the things I want to get sure that it's very clear on this, that real estate is not a get rich quick scenario. Real estate and time and compounding of your money is life changing. So again, I'm only talking about $100,000 investment, perfect scenario that you never lose money, everything goes great, and it's not a massive tax complication. $3.2 million in 25 years, and you, in theory, started out only with $100,000 and you let the money work for you. So if you could imagine a scenario in year 6, you had another 100, and in year 11, you had another 100. I mean, you could easily grow this portfolio of passive income, of wealth growth, of financial creation. And this is more to goes to your net worth versus what you're spending on earning. It could be absolutely positively life-changing. So again, you want to make sure when you're doing these investments that you evenly distribute. So if you're doing more than one investment, you want to try different things. So we talk about distributing across assets and categories, maximizing the power of compounding, keeping your investments until you have this time surplus, and allowing the 4 to 5 years for your money to fully appreciate. And again, I want to make sure, I've said it before, this is a very oversimplified, but don't miss how powerful this is. Absolutely powerful. This is life changing. I'm an older guy, and if I'd have known this 25 years ago, somebody had taken the time to tell me this, my life would be very different today than it is now. So I'm having to work extra hard to catch up. So again, the compounding your money, time is your friend, and continuing to reinvest is critical to create real, true financial independence and wealth. All right, you can do you. Am I doing this one, Mike? I'm okay.
Yeah, you continue here, Trevor. I didn't know
Awesome.
if you needed a water break. I was
No,
like,
I'm good. I'm chatting away here.
yeah.
So again, this is a little different thing. So a little cycle here. We try to make it look up. So is your passive income much larger than your investments? You're able to earn enough money off of fees and reinvest to keep earning. So again, let me talk about this. So we're talking in this step here at some point that your passive income exceeds your life needs to have. Number two, when we're going across the bottom, when you switch to active investing, when you're an active investor or a deal sponsor, you're going to collect fees, whether they're acquisition fees, asset management fees, but you're still going to continue to passively invest in your own deals. So again, on this scenario is from 2 to 3, are you able to create enough in fees and income so that you can continue to have your capital work for you? Again, I want to make sure that you understand it. And then there's an option that is very powerful depending on your situation. If one spouse continues to work, and the other spouse becomes a professional real estate person, this really magnifies everything. So you still have the good income on one side, you have the professional real estate person on the other side, and they're together when you're filing a joint, it can be significant. So for example, I had a friend and he's very, very successful doctor. And he was earning a lot of money, you know, $500,000 a year. He was also paying $200,000 a year in taxes. He was one of my original mentors and he got into multifamily. His wife became the passive, or sorry, the active person. So she's the one that manages all the deals, does all of the activities, and qualifies as a real estate professional. They've managed to buy a lot of assets, so they get a lot of passive income losses. And now he's actually going against his W-2 income and he's almost paying no tax. So think about the power there now when you reach this next level, that this man was paying a couple $100,000 in tax and now he's not. Plus, they're earning the money on the passive investments and on the actual investments. It is an amazing thing that you can multiply your money really quickly. So again, it says it at the end here. I want to make sure I am not a tax advisor. I'm not a tax planner, but these are things that I've learned and I've seen people put into practice, and it's been life-changing for them. Absolutely, positively life-changing.
Okay.
All right, he's gonna talk about the more complicated stuff. I get to
I
do
don't
the
think it's
easy stuff.
I don't think it's the more complicated, but it's thank you, Trevor. And I'm actually gonna appreciate everybody participating. I'm gonna launch a second poll here as well. And I'd love to get some more feedback. And again, we're looking, at these polls to help us, help you guys be more, insightful into what we deliver and bring on again, these week in, week out basis. And here's this second poll coming up. So, alrighty. So what does the IRS consider a real estate professional? So build up everything that Trevor shared, there's that large advantage if you can get to that in that real estate professional, and that allows you to not be limited on your deductions. So to qualify as that real estate professional, the typical test is that you need to do more than 50% of your services or your qualified income, basically. More than 50% of that needs to come from the real estate, property, the trades, the business that you do. And there's also a minimum that needs to be of at least 750 hours of service. So the way to think of that also is if I have some other job and that job, that makes me do 800 hours, then even if I did 750 hours in real estate only, I don't qualify. I have to do 801 hours in real estate. So it'd have to be more than my other income that I would be reporting. So those are a couple of the key tests. Again, consult with your tax professional about this. We'll have one of our tax professionals on the call in the next few weeks again, and probably have an opportunity to talk about this or other things. We saw some, I'm going to get to it at the end. We saw some new interesting announcements coming out, and we're trying to dissect it a little bit, make sure we understand it with our tax professionals. We'll share a little bit that at the end of this as well. And so this ties into the part about why the tax professional is important. Do the passive investments help you qualify? So the passive investments do not necessarily directly help you qualify to be the real estate professional. The cool thing is though, once you qualify as a real estate professional, you can take advantage and use your passive investments in the process. So once you qualify as a real estate professional, you can take that passive investment, say you get a nice depreciation in a year one type scenario. I think, if you look at our Horizon deal for this year, until we learn if maybe that has changed. Currently for Horizon, for example, in the first year, you're going to get a 40% deduction off of your taxes per se with the depreciation. So in the case of like 100,000 investment, you'd be able to get a depreciation of 40,000. And if you're on passive investments, that could be limited. But once you are fully as a real estate professional, you could take that full 40,000 off of your taxes up to the amount, up to a limit of the amount. Let's see. Yeah, I mean, the other key thing is, you have to be able to demonstrate that you are a real estate professional. There's different ways people do that. I mean, you can keep different records. Your calendar, maybe, depending, like, if that's the main thing you do, your calendar and everything, like, hey, I'm going and walking property here. I'm going and doing due diligence on this property. I'm checking in with the property management company. I have all these property management calls every week or week in and week out. Those are the things that can help you. You can keep a spreadsheet of it and just of all the activities that you do. And those need to be activities on assets that you own and operate. And then please drop any questions you guys have in the chats, and Trevor will be answering them, or we'll answer them at the end. We'll answer them as we go. Then, help you all out there. So the advantages kind of that being a real estate professional. So one of the things I mentioned is that you can have unrestricted losses against your ordinary income. That is awesome. Like, and especially like if you're a couple and one of the spouses can qualify, we'll talk a little more there. That can make a huge impact to your net income. Basically, there's a gross, and then if I can deduct, up to 250,000 off of ordinary income, and get all of that back in taxes, I'm getting a huge bonus right there. So there is a limit: 250,000 for single taxpayers, 500,000 for married. Is one of the limits. Let's see. So that's some of the key things that you want. And again, you can also deduct not just your losses, but other qualifying expenses like mentorships that you sign up for. So, if you qualify as a real estate professional, you sign up for a mentorship with Massive Capital, that 20,000 can be deducted off of your taxes. As an example, again, consult with your CPA about that if you got any questions. So let's talk a little more in some of the tax status of that. So, we qualify as a reps. Reps is the real estate professional status, and you materially participate in your activities. So whatever rental activities, construction, development, whatever those activities are, you got losses that you incur, and they're not considered passive anymore. They're considered non-passive. So it means that you can offset all of your taxable incomes, not just the real estate earned income and not just your passive investments incomes. So that's one of the key huge bonuses to think about when qualifying for reps. So it's great for high income earners. This is just a incredible opportunity that you can just keep more of your total income that you may make on this, on separate directions and ways that you're making that money. So So and then again, real estate syndications, you can invest in those as you go. So even if once you get to that professional status, other investments you make will fall into the allow you to have more depreciation. So if you did get the reps, you can invest in like a deal that we have or someone else has, and you will be able to take that depreciation against your taxes as well. And Trevor, if you got anything to share in there, please do. One of the things I wanted, as I mentioned, a key thing, especially if you are a married couple, is work on the opportunity. Like if one of the couple is interested in real estate at all, look at the option of them becoming a real estate professional. Get involved, get them working at it, find, the legal way to make that work for you and increase your revenue, your net income from that process. Okay. Oh yeah, thank you, Trevor. Remember, please consult your own tax and legal professional for advice. We can talk from our experience, and we have a fair bit of the experience around here, but at the same time, please consult the professionals as well. So I'll stop there, Trevor. Do we have many questions or?
Yeah, I think we got, so a couple of questions, and I'm not 100% positive I answered them correctly. So for example, someone asked about flipping houses, and flipping houses is a completely different category. From what I understand, it's referred to as a trader business. It is not considered an investment business because you're flipping things, you're not owning them for periods of time. But I'm not an expert in it. There are other things such as being a real estate agent that count, or being a broker, or doing different things. And one of the things that a lot of people ask, and it's almost impossible to have a full-time job. In fact, from what I understand, it is impossible, but let's say almost, to have a full-time job and qualify for it. It has to be one of your primary activities. So you could do it as a part-time job where you had another part-time job, but it's almost impossible to qualify. And it is one of the most audited exemptions, and they'll ask for the documentation of the proof. So it's just something to note those things. That's correct. Passive losses cannot be used against W-2 income. So the doctor did it, so their family filed, and his wife became a real estate professional. And when they file as jointly, they get the benefit of that status.
Yeah, so that's that 500,000
That's correct.
that they get to deduct from their total tax, from their total tax liability. Yeah, I would agree with Edwin as well. I mean, if you personally have a full-time W-2, it would be very difficult, is very difficult to demonstrate, you can demonstrate material participation, but to demonstrate that you're doing more of that than you are your W-2, it does become very difficult. It's a tough hurdle. I mean, we're not trying to suggest to people to go and do something that, that isn't, really legal and correct, but just looking, at ways that towards more the way eventually, okay, I get to the point I can stop working, as Trevor shared. And if I then wanted to just become active at the same time, I then could become a real estate professional and turn all my previous, turn all those losses into actionable deductions more so. And then the other is, again, as your spousal scenario. So that's the things I would think about there, Edwin. And I agree with your comment as well.
And I just quickly Googled it to make sure that maybe Google can answer better than I do. So simply put, professional IRS designation means that you operate a real estate business You work in that business on a regular basis. And
Say it
work
again, so repeat that, Trevor.
So
Apologize.
simply put, real estate professional, the IRS designation means that you operate a real estate business and you work on that business on a regular basis.
Yeah. Yeah. So, I mean, yeah.
And that's
So,
Google.
so, and that's accurate, fairly accurate. And, so I think, everybody's going to have a unique case. Spend some time, do a little bit of due diligence, and make your decisions. Follow up. You can connect with us. We can potentially get you connected with some different CPAs that are more knowledgeable in this. Again, we can provide kind of directionally what makes sense, but we're not going to give you the final, like, yeah, you're definitely qualify or you don't qualify. That's not our role.
Right.
And
Yeah.
so, but we can, support, Hamida was talking about, some different situation there. And there are a lot of different situations. We all have unique, different situations in our lives. See some other questions there, Trevor.
So Rachel
Rachel.
asked, and I'll be honest, I don't want to answer an individual personalized question. The goal here was to be generic in our conversations and what we're doing. We can definitely, if you contact one of the massive capital, we have a great CPA that we can connect you with. But yeah, I just don't want to say, well, because I'm not a tax professional.
Yeah, agreed. And that's thanks, Bill and Bonnie, of our community, Serini as well.
Yeah, I think that's a real good idea. If you've got, if you can sniff out that there's a problem that people need to solve, you can refer them rather than solve it. In reviewing documents as a loan advisor, I do that all the time. I said, I'm not going to tell you this is completely right or completely wrong, but you ought to see the professional who's going to put their name behind it.
Exactly. Thank you. Appreciate that.
Mm-hmm.
And so, Serini, if anybody is looking for the advisor, I mean, we use Bill Pilkington. If you connect with us, we'll share. It's not his direct contact; it's his contact of his someone that will set up appointments with him for him. And Bill does, I don't know, at least 70% of Massive Capital's assets, both internally, externally to both to Massive Capital and to some of us as individuals.
And we always post our past webinars on our YouTube channel. So this one will be loaded up there tomorrow afternoon. But there are, oops, sorry, that's the wrong one. That's my YouTube. You could visit that if you want, but that's mine. Put it up here, sorry. But there are some definite ones there that have Bill giving much better advice than all of us.
Brenda, do you want to talk about she a little bit?
Sure. So she builds, she owns, and she is you for women. So it's every other Tuesday. So we just had our previous one last Tuesday. So any women that are in this webinar, I would recommend y'all joining us because we have really good women every other Tuesday.
And I would as well recommend any of the gentlemen here, encourage your wives to join, or your daughters or significant others to join it. It's a great group. They're bringing a lot of awesome content, encouraging the empowerment, just uplifting and working together with other ladies. It's an awesome thing that they're doing.
And we have our recording on the YouTube page too, the one that Trevor put, so you can see the one from yesterday, how to cover your assets.
Yeah, it's a great group. I send a lot of ladies to do that, and they always send me a note saying thank you.
And again, just share a couple things. So as we wrap up, if there's any other questions, let me stop sharing, I think, as well. Sorry, let me stop sharing. So we can go to more just open questions, raise your hand, or just open your mic. If you've got a question, then let's jump on it. And appreciate everybody coming tonight
Yeah.
and
Lots
participating
of
with us.
familiar faces. Good to see you all. We did such a good job. There's no questions.
Yeah, and again, hey, if y'all have just a question, of nothing that even related to the topic tonight, take advantage of the time we got here. The one thing I learned is, as well, if you want to get, known, be known, people, depending on what you're trying to do in your next steps of things, raise your hand, ask some questions, give some feedback, share, comments, whatever that is, you disagree, don't, whatever. We're here. We're an open book about things.
Yeah, so I reposted an answer to Dennis's question, the link. So if you want the general admission, you just put free ticket as your QR as your code, and it gives you the general admission for free. And then a VIP is $149. You put $100 off, and it's only $49 for the VIP ticket. And I highly recommend it's for $50 to get a full day of education and all the recordings, it's great.
Okay, Sam, let us check into that. Sam, you want to send your
Yeah, put your
contact to
information.
Brenda, and Brenda will follow up with you, and then we'll get that sorted out.
So go ahead.
And we'll give Sam, for finding an issue, we'll give you a free VIP ticket.
Go ahead. I know I'm gonna butcher
guys.
this, Zach.
Yeah,
Selchuk.
Selch. I go, yeah, Selchuk.
Selchuk.
My can say it's Selchuk, yeah. So I have a question about this GP candidate slash student. What do you guys expect from for those who wants to be GP to locate the deal that meet the criterias and then put it in the contract, or what do you expect from them? So let's say I want to become a GP, I become a student of the coaching session and all that stuff. Seeking the good deals. When I'm saying good deals, like meet the criteria and all that stuff. So do I have to put that in the contract to work with you guys, or how does it work? Thank you.
Yeah, no, thanks, Selchuk. Trevor, you want to run at it first, and then I'll go
Sure.
second?
Yes, so basically what we've done is we've created this system where many options work. So you can join our mentoring program, you can bring deals to the program. We're gonna underwrite deals, and as deals come into the program, all of our students work on those deals. We also train a lot of our students for capital raising and bring them into the deals. And then what happens is when a deal happens, if it's your deal, we'll help you. If it's all agreed and everybody likes the deal, if it's one of our deals that brought in, you can still get involved. All of our students see a deal from beginning to end. They also raise capital on the deals. And then one of the things that's super key to our program is the fact that as a student and you're part of a deal, you get access to be on the active side. So you can attend all the property management calls, you can attend all the GP calls, you can attend all the investor updates, you can even intercept the investor updates and send them directly to your investors. And this helps you with the active duty responsibilities. So it's this whole thing, and we call it a path to partnership. To be honest, we're not necessarily looking for students, we're looking for partners. And as we grow, you grow, and as you grow, we grow. And that's really the magic kind of behind our mentoring program. It's very different than just saying, here's some information, go learn it out, find a partner and have a nice day.
Yeah.
Yeah, so, but, you know, potential GPs has to go to your coaching program. That's the requirement.
That is the best way to get through.
Yeah. Okay, but we don't have,
Doesn't
we don't
mean
have
we
to,
still, a deal comes to us and it's a phenomenal deal and we agree somehow to partnership on it. So I put in the chat earlier, you know, deals at Massive. And again, you're gonna send a deal, it has to come with all of the backstory. Why is it a better deal? You know, and again, if it's on market, nobody needs you to bring them the deal. It has to be a special deal off market that no one else can find. Has to come with some good underwriting. So at least it even gets to our back of napkin test. And so Mike's brought up a great slide here. I'll let you explain that one, Mike.
Yeah, so I mean, the what we're looking at is to accelerate people in the path. So the idea is the closer you spend with us, and let me get to another. The closer you spend with us, the more that you're going to get accelerated into our deals and also into your own deals. So two things I showed earlier in the presentation. One was our deal flow. With that deal flow, we have the opportunity to obviously bring many deals. We closed 10 deals last year. We're looking to close 10, at least 10 plus this year in 2024. So those bring opportunities for any students to join in those deals. We find the space where they fit best. And that comes back to the previous slide I was showing. I'll come back to it. But this is part of the program is, so we have on Mondays, basically a weekly team connect and a capital raising call. And then what happens on this Tuesday, Wednesday, and Friday is it's our massive daily deal review. So the massive principals review all the key deals with our underwriting team and the students. And then the students also bring their deals if they want to do a deal. So we're making decisions there. So these are our not designed just for coaching sessions. These are actual operations sessions that everybody gets to join that joins the GP path. And then on Thursdays, we are going through the deals that we have under contract. We're following our contract to close process, our template for that contract to close, everything, a Gantt chart following the routine of what has to happen. And again, you're already in the deal probably, or you're going to be in the next deal and you get to see that process happening. The two key standalone coaching sessions really are on Tuesday afternoon and or Thursday afternoon, which is the capital raise training session and the underwriting deals Q&A session. And that's designed just for answering questions, coaching, helping people learn to do better capital raising and things like that. So if I come back here, so we work through, you know, we are partnered in with the Family Office Club as well. So the Family Office Club, you get access to their training through this, no extra cost. And they have a certification program. We help work through that certification on our weekly calls. We, you know, ensure that everybody's underwriting deals through the process, walking, touring properties, either with us or on their own or with some other students, depending where they're located, work towards submitting the LOIs. So at the end of the day, you kind of figure out as a GP, where do I fit best? Do I fit best as a capital raiser, investor relations type role? Do I fit better as deal finder and acquisitions? Or do I fit better in asset management? Asset management is the hardest, longest path to get to. The capital raise is about the fastest, easiest path, and deal finding is in the middle, you know, and these all relate to time commitments as well as you go through that. So,
Okay.
So those are,
Okay.
that's it. I'll send you, Selchuk, some information. I'll send
Yeah,
you
yeah, yeah.
this.
So,
I'll send you this deck as well.
yeah, I asked that question just to put out there, not to, it's not like I'm not walling.
Yeah, I'll send it to you anyway.
You guys have a great team. I'm considering to get in that coaching and all that, but I just want to ask for everybody as
Yeah.
well as myself.
Thank you very
So,
much. I appreciate the question. It's a
Yeah,
great
yeah.
question.
all right. Sounds
Here's
good.
some,
Thank you, guys.
and
Yeah,
also
go ahead.
some just the value proposition for people as they think through it. So, all
Okay.
right. Yeah. Oh,
All
shoot.
right.
Stop,
Thank
stop,
you.
stop.
Thank you much.
Yeah. Thanks, Selchuk.